As I said, my name is Carmen Morris, and I will be your presenter for today. Welcome to Credit Management, Understanding Your Personal Credit. We will be discussing a lot of information today, but I like to make it a little interactive because I know that many of us may have certain information about credit, but some of us are just starting. And for the sake of those that don't know too much about personal credit, I'm going to keep it very basic and gradually move on into the more advanced things when it pertains to credit. We're going to be covering today. My screen is not moving on you. Is it moving on your end? There you go. What we will cover today is what is credit and how does it work. I'm going to go deep into the points, how these points apply to you, which areas of your credit and the percentage of things that affect your credit. We're going to discuss step by step on how to repair your credit or rebuild your credit for those who have fallen into misfortune financial situations and need to add some points and gain some points in your credit scores. We will talk about some of the laws that are available to you to protect you. These are consumer laws that are there that you can use to defend yourself when some creditors or collection agencies come after you. We will also talk specifically how to deal with collection agencies and then maintaining a strong credit profile, the things that you can do to sustain your credit at a certain level. So let's discuss what is credit. Credit is just a 3-digit number that measures your credit worthiness. These numbers come from different scoring models that are set up by different organizations. And it goes from 300 to 850. So the least credit score that you can have is 300. These are the points that are granted to you. And between 300 and 850, there is 550 points that you, as a consumer, you are strictly responsible for. And we're going to talk about how you can go ahead and grab all these points in different aspects, in different areas of your credit. Credit is debt. And unless you have debt, your credit score will not increase. So the reason I'm going to be focusing on the points and how to gain and increase your credit score is because the way in which you use the debt is the way in which your credit score is granted to you. Not all credit scores are the same. There is a FICO score with different models. And I'm going to discuss also about the different models within the FICO score. So the FICO score was instituted by the Fair Isaac Corporation about 25 years ago. And they have, within their scoring models, they have different numbers that are assigned to different guidelines. Then there's the Vantage score, which is completely different than the FICO score. This was put together by the credit bureaus, Experian, TransUnion, and Equifax. And this was put together for people who are having financial difficulties in which they need to be more lenient in the way they apply the points and the percentages to the credit scores. Then there is the Ultra FICO score. The Ultra FICO score is a credit model for those who have no credit or little credit. Mostly the Ultra FICO score is measured by your bank accounts, the way you pay your bills. They look at all that, and that's how they grant you the points that they give you. So how is credit calculated? I know many of us have heard these. It's 35% payment history, which is the highest factor, 30% the amount you owe, 15% credit history, 10% the new credit, which in other words, it means your inquiries when you're searching for credit with many lenders. And then the type of credit. Most lenders use the FICO score. I need us all to remember this. Anytime you're trying to make a major purchase, or borrow money from any bank, always work on your FICO. Your FICO score is what most lenders use. And there's different models within the FICO scores from 1 through 9. As a matter of fact, right now, it's 10 was just released last month. So the FICO score, so much so that the mortgages use, I believe, 2, 4, and 8. These models are put together for the lender to look and see a certain criteria that they need to know about that borrower. It could be the borrower is just focusing on the payment history, how much money they have available to them, and how they manage credit. So most credit providers use the venture score because it gives you a higher score, meaning they are more lenient in the way they award you those points. Some clients call me and always say, well, my Credit Karma said that my credit score was 750. But yet, when I put my FICO score, it's 690 or 695. Well, the reason is because the FICO it's always a little lower because they're kind of a little harder in the way that they award you the points. So if you have any credit service provider like Credit Karma or ScoreSense and others that are out there, they most of the time they use the Vantage score, which is, remember, at a lower rate. They score you at a lower rate. So let's talk about what makes up the credit score. Remember, I said that 300 is the least that you can have. That's the lowest credit score you can have. So you are responsible for 550 points. The payment history, that 35%, it's 192.5 points on your credit report. So if you take that and add it to 300 right away, you're in the 400s. So your credit utilization is 165 points. The length of credit history, 82.5. And we're going to discuss how you can go ahead and make sure, after you analyze your credit report, make sure that you are taking advantage and you're not leaving any points on the table here. The inquiries, remember that 10% for new credit is 55 points. And then the credit mix, which means what type of credit is available to you. That's another 55 points, which represents another 10%. Now, if you take the payment history, and this, guys, this is the most important part of your credit report because it represents 35%. So this is the most important factor that you should focus on when you're trying to build credit or establish credit. And it is the hardest thing for you to delete from a credit report. If you are late on any bill, the minute that late payment hits your credit, your report, right there, you can lose, just for one payment, you can lose at least 100 points sometimes. So it is extremely, extremely important that when you pull your credit report and you look at your payment history and you see that you have one late payment, even if you're trying to make the payment on a credit card, on any loan that you have, at all costs, try to avoid that late payment going on your credit report. If you cannot pay your credit card that particular month, make sure that you can at least pay the minimum payment by statement day or 30 days from that due date, because no late payment on a credit card goes on your credit report unless it's 30 days after the due date. So you have all that time to make sure you can at least make the minimum payment or call the creditor and talk to them. Late payments, once they hit your credit report, the damage is done. Even if you remove it, if the company removes it from your credit report, the damage has already been done. You're not going to gain those points into 12 months, at least 12 months later. So focus, I always ask clients to always focus in not being late, making sure that that payment is made on time, or if you cannot make it, to make sure that you can at least make the minimum payment by statement day before that statement closes, which is a few days past your due date. You're not going to be reported late a couple of days past the due date. The only thing that you will lose there is that the credit card would probably add a late fee that if you talk to them, they probably waive it. But I put a lot of emphasis in this because this is very, very important. Especially, I get clients calling me, well, I need to delete this late payment. Don't focus on it, because if that late has been there for more than 12 months, it's not doing you any damage. The damage was done the minute it hits your credit at that point. So in order for you, if you want to keep up to, if you can keep up to 98% of the payment history, you can gain 150 points of those 192.5. In order to get all these points, at least you have to have consecutive payments between 12 and 24 months. This right here, it's one of the reasons that a lot of young people, between this and the credit age, is the reason why a lot of young people don't get to the 850 credit score, because they need a certain time needs to elapse before you can actually get all the points. But this area right here, you are in complete control over it. And let me just explain. See, I added 300 to that. I added 192 to 300, so it went up to 192, 492.5. Now, once you pass that payment, then you go to credit utilization. Your credit utilization is 165 points on your credit. This is the second highest contributing factor. This means in this one right here, you are completely in control of it. All these 165 points is totally up to you. Because if you're granted a certain amount of credit and you use a certain amount by statement date, and let me just make this clear, you can use, for example, I have an example here of $1,000. You can go ahead and use that $1,000 by statement date. If your statement date is the 27th, you can go ahead and use that entire amount by the 27th of the month. It should be paid, and you're fine. So in order, you can, this only works on active account credit cards. So if you don't have a credit card, guess what? You cannot gain this 165 points. You will never get to the 800 credit score unless you have a credit card. So in order for you to do this, you need to at least have a few revolving accounts, which I'm going to give you some suggestions of the accounts that you can open. So when you're calculating your utilization on a credit card, I recommend, I know you've heard probably that keep it to 30%. That is crazy. That is a no-no. You should not have 30% on any credit card by your statement date, because that is showing that you're using too much credit and you lose a lot of points. So if I recommend that you use between 1% and 3%. I pay everything with credit cards. I do not use cash. I do not use a debit card. I do not use nothing other than a credit card. Why? Because a debit card may cost you, depending on how many transactions you make throughout the month, and then that credit card is not benefiting you. But if you use your credit card for every transaction that you do throughout the month and making sure that you can pay it by statement day, you are fine. So if you have $1,000 worth of credit and you use $200, that means your credit utilization, your utilization rate is at 20%. 20% is way too high. You will lose some of those 165 points, at least 60 to 70 points by using it to 20%. If you can keep it under 10%, it's great because you'll get most of these points. But if you can keep that credit card to between 1 to 3%, it's great. Because if you have here, if you went from 300 to 657.5, right here, you can apply, at this point, you can apply for any credit card, any tier 2, what I call tier 2, which is any revolving account. You may be granted between $3,000 to $5,000 worth of credit, which you increase, you will get some point in the utilization. Then this is the average credit score in the United States. So remember, we went from 300. Now, if we're going to the credit utilization, now we are 657, adding all the points. The credit age, this is the third one. The credit age is 82.5. And an average account, you have total control of this. Because the minute you open a credit card, it starts counting. This is where I see a lot of young people are never able to get to 850 credit score into their at least 11 to 12 years with in that particular account. You will lose points if you close any accounts. And I'm going to talk here about those people that like to get rid of student loans that are on their account and old accounts. These accounts are doing you good because these accounts are giving you some of these 82.5. So don't ever close any accounts, even if you have any negative information on that account, because the negative information on that account, you lost the point in the beginning when that account went into negative. Unless it's a collection, leave these accounts alone and don't touch it because it benefits you. I see that there are probably questions in the chat. I'm going to open it up for questions so far. If anybody have any questions. Anyone have any questions? Yes, the notes will be sent to you. I will send this presentation to everyone in this webinar. So as I was saying, you will lose points if you close any accounts. So at this point, you are at 740. This is good credit. At this point, you would have no problems in getting any credit from any bank or getting approved. And the reason you need to be above 650 is because the lower you are on your credit score, the more it will cost you if you go purchase a car, if you buy a home. The more threat you represent to the lender, the higher it's going to be the cost to you. So let's talk about credit inquiries. This credit inquiries can be removed, and there's two types of inquiries. There's hard inquiries and there's soft. The soft one do not affect you. Do not affect this 55 points. With the soft one are normally pulled by people you are already doing business with. Credit cards you own, or banks that you do business with, or your own bank that you bank with. The inquiries are there for 12 months. And if don't focus so much on removing the inquiries if you have like 4 or 5. Now, for those of you that have many inquiries, like from years back, that they may be on your credit report, then you can go ahead and dispute them. And I'm going to provide those of you who would like those letters to just email me, and I will provide you those letters that you can send. So, but this is 55 points on your credit report. Then your credit mix is that other 10%. At this point, you have gotten all 550 points and you are at 850. These points are granted to you depending on the type of credit that you have. For example, if you have credit cards, what type of loans. I recommend 2 to 3 revolving accounts, one short-term loan, and a long-term loan. And why do I recommend that? Because this is what we have seen through the years that work as to having a perfect credit profile for those of you that are building credit. So this is what a perfect credit profile should look like. And this is, guys, this is not something that we just saying or anything. This is something that we have proven to be the fact that if you have at least 2 to 3 credit cards, one short-term installment loan, that could be a car loan that is for 12 months or up to 24 months, and one long-term, now car loans can go up to 72 months, that's also considered a long-term. A student loan or mortgages. For those of you who have student loans that are trying to get rid of the student loans with through the Biden administration and fill out your applications. Once that student loan, that application is approved and that student loan falls off your credit, you're going to lose a few points. And that's the sad truth. Because if they start forgiving all these loans, you're going to lose some points. At least 10 to 15 points we are expected to see on people's credit report. Then also, along with the long-term loans are the mortgages. So maintaining the credit utilization under 9% preferably, and I'm going to keep saying this, 1 to 3% is key. You can use all your credit, but you make your minimum payment. There's 2 days that you need to have in mind, and that is your statement day and your due date. By the due day, you can make your minimum payment and then pay it off, pay the rest by statement day. The law is on your side. Let's talk about compliance. There's the FDCPA, the Fair Debt Collection Practices Act. All collection agencies have to abide by this law. The one that I use the most is 807A. False or misleading representation. Collection agencies always do this. And one of the things I'm going to keep saying when I talk about collection agency, which we're going to go into right after this, is that collection agency never have the correct information on you. And the reason they never have the correct information on you is because they're a third party. They purchased the debt or the debt was transferred to them. And then they don't have the correct account number. They don't have your social security number. They don't have anything on you other than what was provided to them by the original debtor. Now, there are some collection agencies that you need to pay attention to, and I will tell you which one are those. But this is one of the laws that I use when I'm dealing with collection agencies. This is the best one because anytime they are giving the information out, they never have the correct information. Therefore, they can never verify or validate that you are the person who owns that debt. And then there's the FCRA, the Federal Credit Reporting Act. All banks and credit bureaus abide by this law. So when you're writing your letters, disputing any information on your credit report, this is one of the laws that you quote on that letter. And I'm going to be providing you with one of the letters that I use when it pertains to the personal information. The credit bureaus and the bank are responsible for providing your information to someone else. For instance, if you're seeking credit from a bank, the credit bureaus are the one providing that information about you, personal information about you, to these other parties who are seeking it. They're purchasing, in other words, they're making a business transaction with your information, and you need to have control of that. And when you are disputing any information, you need to always quote the law. And if you don't know if some of these laws are written between jingles that we don't normally speak about or understand, If you don't understand it, you can contact someone there to explain it to you to make sure that you're using the correct law that protects you. Now, where to start restoring or rebuilding your credit? Get an updated copy of your credit report. You can go to onyourcreditreport.com and you can get one for free. Get all 3 credit reports for all 3 credit bureaus, Experian, Equifax, and TransUnion. This is free to you. They have to give you, well, now they're giving it quarterly. During COVID, we were getting it weekly. This is how much they knew that some people will fall into some credit misfortune, so they were providing it to us weekly. Now you can go quarterly and just pull up your credit and they will give it to you. Once you pull that information, you're going to list first any inaccurate information that is there about you, your personal information first, any addresses, name, or employer. Everything on that report has to be current. List all the negative, take another piece of paper and list all the negative information that is there, any derogatory information, anything that you think that is robbing you from all those points that we just spoke about, any collections, charge-off, and late payments. Because there is a way that you can go ahead also, there's laws that protect you, and there is a way that you can go ahead and work this out. Now you prepare, once you pull your credit report, now you are prepared to start challenging anything on the report. This is, you can take a screenshot of this and I will provide you guys with the PDF file on this presentation. This is the letter that I use. You can tweak it around or you can go ahead and use the same one. The first thing that you do is that you dispute your personal information. Why? Because it is any information that is not current on your credit report is not supposed to be there. They're not supposed to have your phone number listed if you don't want it. They're not supposed to have 3, 4 addresses, address history. No, because as per the FCRA, any information on your credit report has to be current. So if you live with your auntie 10 years ago, or you move from one state to another, whatever happens, it has to be your current address. It cannot be a list of those addresses. And the reason this is where you start is because if you start disputing any information, especially I see these a lot in collections. If you start disputing any collections with any collection agency, and it was your former last name, they have no right to come and even speak to you. In fact, I feel the collection agencies have no right to contact me because I don't know business with them. And I'm going to talk about that further on when we get to dealing with collections. But this is the letter that you use. Every current information, do not start the dispute process into this is done. This is key. Never, ever put your signature on anything that you are disputing concerning your credit. And your social security number, it's only given to the credit bureaus. Excuse me, not the collection. Collection agencies don't know nothing about you and they don't need to know anything about you. Excuse me, my throat is dry. Excuse me. So as I was saying, any old address has to be removed. Any employer that you're not, if you're not no longer working there, then it shouldn't be there. When it comes to employer, make sure that this employer, if you're not currently working and you have one employer listed on your credit report, just keep that one. Don't delete it into you have an employer on your credit report. The reason I say this is because it looks good if you apply for a credit card, you may need to see, they may need to see that you at least have an employer that you're listed. But you can take and you can send also copies of your driver's license, excuse me, utility bill, or any proof that you live in that particular place to make sure. But don't sign the letter. And this type of information is only sent to the credit bureaus, never to a collection agency or any other creditor. These are the address. This was the most current address that I have for all the credit bureaus. You can send it right here. Sometimes they change the PO box. So as of 3 weeks, this was the place that I was sending all the letters. So this was a place that where all my letters were being sent, and it was correct. And my clients are using the same. So now these are the people that I need you to start knowing about. LexisNexis, these are the third party who take your information and send it to the credit bureaus. This is what the credit bureaus get your data from. They take the data. These are third parties. They just furnish information when it's requested from a particular lender or the credit bureau. LexisNexis, if you're not familiar with who they are, please make it a point that you find out who they are, because they know you since birth. The first time I pulled my LexisNexis report about 21 years ago, these people had 135 pages on me. I had a ticket in New York City when I was a teenager, and they had it there. If you're seeking insurance and they need to know, and the insurance company needs to know, even auto insurance, they need to know if you had any reckless accident or anything, they pull this report. They even know how many prescriptions you go pick at the pharmacy and what types of prescription. So if you don't know who they are, you have the right to get one of their reports once a year. They know that the pages are going to be a lot of pages to be printed, so they do not provide you with a printed copy anymore. What they do is that they'll send you a password protected link in which you go in and you go look at your report and you print it. If you are disputing any bankruptcy, any public record, they normally have tax lien, judgment, any foreclosures, bankruptcy, anything of that nature, any public record, normally is LexisNexis, the people you go to. And the way you can start disputing the information there, you have the same right to dispute the information on those reports that you have in the credit bureaus. If you have any bankruptcy, which is the one we deal the most with, is normally if you dispute it on LexisNexis, they're going to come back to you and say, well, we were provided by this information, the court provided this information to us. Then at this point, the court does not provide information to anyone. So at this point, what you do is that you send a self-stamped envelope to the court asking them for their procedure concerning bankruptcy, and then they'll send you that letter back. So when you're disputing any bankruptcy, because if you take it off LexisNexis, once you dispute it with the credit bureau, then they have nowhere to verify that debt, which means you are able to delete that bankruptcy from your credit report, which is does a lot of damage. Even if it's dismissed, it does a lot of damage. So all the disputing information, you should get this this report. And remember, they're not a credit bureau, they're a third party that collects data. They put it into usable information and then they sell it out. You can suppress them also as well. Then you can go ahead and first clean it up suppress it, and then go and clean up anything of any public record that could be on your credit report. And so it's CoreLogic, SageStream, and Innovis. CoreLogic, for many of you in the state, if you are in the state of New Jersey, you're going to see a credit hit if you apply for the NJEDA loan, that microloan that just came out last month. You're probably going to see some information because this is who they use. They pull out people's information from CoreLogic. But these are people that you need to also keep in mind if you're working in restoring or cleaning up your credit. So let's talk about dealing with collections. Dealing with collections, it's something that at one point or another, most of us, I would say 98% of us, have to deal with them at one point or another. You know, you go to the doctor, you forget to just sending that check for the co-payment, and there all of a sudden someone is having you in collection for $60. Something that you never knew, but once it hits your credit report, it does a lot of damage in the beginning. Excuse me. So how do you deal with collection? The collection agency normally sends you a letter in the beginning. During those first 30 days, pay attention. The first letter you get from a collection agency, that's when you should act right away. You take action and you respond to them with a debt validation letter. If any of you are interested in obtaining that debt validation letter, you can either speak to Catherine, I'll make it available to her, and she can go ahead and provide it to any of you who need it. This 30-day period is called the done-in period. During these 30 days, the collection agency is to validate that debt, to make sure that you are the person, and that it has to be, they have to prove that you are the owner of that debt. I am not saying to be unethical or say, no, it's not my debt, or it is. You don't need to do anything of that nature, because what I say is that the burden of proof is never, ever on you. It's always on them. You never have to prove that the debt is yours. They have to prove to you that it's yours. So as soon as you answer that first letter that they send you with a debt validation letter, asking them for the proof of the debt, number one, a contract bearing your signature. You have never done business with any collection agency because they're normally a third party. You did business with someone else, and then this person turn around and pass the debt down, and that's a separate business for them. You have nothing to do with that. So a collection agency calls you, never validate the debt. It is not yours because you never did business with them, but you don't have to let them know that. You ask them in a debt validation letter, you ask them to provide you with the information that you need so that they can prove to you that it is yours. So the minute you get that first letter, it is by law that the collection agency have to send you a letter first before they it appears on your credit report. Make sure that you keep record of all these letters. As long as you continue to communicate with the collection agency, they cannot put that debt on your credit report. They will not do it. So what you do is that you first communicate with them. Once they see, and this happens over and over again, once they see that you're not the person that they need to mess with, because you will know and you will go deep into the law and you will go into all the rulings concerning that, they will leave you alone. 99% of the time, they will not even put that collection in your credit report, and they will leave you alone. They will stop answering you because I normally see it past the third letter. Normally, they just fall off. Some of them don't even answer after the first letter. Or any letter that you send to a collection agency has to be certified, return receipt requested, so that you know that within the time frame that you are sending this letter, they should have responded to you. Remember, they have to provide you with a contract bearing your signature and have you accurate information. Like if most collection agencies, they will go and say a few asterisks like start, and then 4 numbers. That's because they don't have the entire number. Oh, another thing is for those of you who have collections under $500, any medical collection under $500 should have been taken off your credit. They started already falling off. There's a new law that any collection under $500 have to be taken off your credit. So if you see that you have any collection in your credit report that is under $500, you don't even need to dispute it because it's going to come off your credit. So the way to start is that you start the dispute process after all your information, your personal information, has been updated in your credit report. You start the dispute process. You send the first letter, certify, return, receive, requested. Never ever sign those letters you send to collection. They don't need to have your signature. Wait 45 to 60 days. It used to be 30 days. After COVID, it's now everybody's saying, oh, everything is moving slower. So now they have between 45 to 60 days. Pull the credit again. And remember that law, 807A. If you see that they have not marked the debt disputed, that's a violation. Right away, right there is a problem. See if the debt is not marked disputed on the credit report, or maybe it's deleted. Sometimes they delete it and they just don't want to be bothered, because they know that if you start seeing the Attorney General's office, and different organizations, they don't want to be out there. It's violating many laws. And collection agencies work with under licenses, secure and bonded. So they try to start and sometimes there are 1 or 2 main shop. They don't have the resources in their office to start managing all these letters. With the exception of Naviari Solutions, these are big organizations or all the companies that work with the IRS or the collection department, they do have the resources, which is of course our tax money, but that's another story. But they do have the resources to go ahead and track all the letters and track all the accounts. But if the debt is not deleted, send the second letter. I have 3 letters. Normally by the second letter to a collection agency, it's done. In New Jersey, I don't know in the state in which you are, but in New Jersey, the statute of limitation for collection is 6 years. However, collection agencies, what they try to do is that they try to redate the last contact with you. And the only way they can do that is if you answer a phone call that they record. Sometimes they call you and they say, may I speak to so-and-so? If you don't know who's calling, always ask, may I ask who's calling? Because the minute you say that is your name, and the minute you say, you know about the debt, you are acknowledging to them, and all that gets documented. So, and then any collection agency that you go to court with, it can be dismissed if you have all your proper documentation that they have violated and they have not followed all the rules that they should follow. Okay, so I'm going to stop here for 1 minute and answer any questions. So you can go ahead and unmute yourself. You can go ahead and unmute yourself if you have any questions.
Hi, Carmen, this is Deborah. I don't have any questions. I just want to say this is really good. I thought I knew a lot more than I did, especially the thing about, you could keep a third, of your limit. That was like gospel, and it's just eye-opening. You're saying 1 to 3%. So, please continue. I just wanted to pipe in that the information all of it has been very helpful.
It's amazing because I tell you the way I learned credit is because I had to do it. I got myself in trouble with 28 credit cards at one point. I had to figure it out. And not only that, and I'm going to discuss tomorrow within the business credit, establishing business credit, how I fell into a place a trap that I could not even get out with my business. I had owned a business for 25 years and always had perfect credit. And there was a point in which I was sustaining my business with my personal credit. And it was the biggest mistake. It was the biggest mistake I made in my life. So this is why I'm so passionate about teaching people, there's ways you can do this. There's ways you can go ahead and take advantage of all the things that are available to you, because the banking system, the bank is not there for you to put your money and just keep it. The bank is there for you to do transactions, and that's it. So the way you learn, and if you start the correct way, I try to teach my children, this is what you do. And I didn't get that education from my parents, unfortunately, but the best education you can give your children, or for the young people that are here on this webinar, the best thing that you can learn is to make sure you understand your finances and your credit, because credit is needed. You cannot do anything without credit. And if you do it, it's going to cost you a lot of money. So in creating the foundation, let's talk about where do you start if you don't have any credit, or if you're just starting to establish your credit profile. You start by getting secure credit cards, then lines of credit, then small limits credit cards, and then you go apply for a loan or mortgage. You do not go apply for a loan or mortgage if you don't have any credit cards. If there are no trade lines that are giving you, remember that 165 points in your utilization, that is key. Because if you don't have that credit available to you, none of these will work. No one will give you money. And if you say, well, if I go to a place to borrow money, they will not give it to me because my credit is a 500 or 400. But listen, there is what is called self-lending. And I'm going to show you that these people they're called self-lending. You can go ahead and lend yourself the money, and they report to all 3 credit bureaus, and that's a short-term loan. So you'll get the points of a short-term that are granted to you in the credit mix. Remember, we talk about the credit mix, which is 82.5. You get those points awarded to you if you go ahead and just do this one credit card. But anyway, these are starter credit card. For if there are any students here, if you feel that you need to start somewhere, this is where you can start. You can take $200, you don't need to have a lot, and go get one of these startup cards. A secure credit card, all there is that you take your own money, you deposit it somewhere, and you use that money every month according to the credit that is available to you. It'll act as a credit card. Remember, the utilization has to be by statement day between 1% to 3%. I recommend that. But if you have it on the 10%, you're doing good. Everything has to, the 2 days that are important on this credit card, so on any credit card, is your due date and your statement date. Those 2 days are key. You can start with any of this. I like the Navy Federal. The Navy Federal happens to turn into a credit card. You open anything with $200 to $500, and they'll give you between 6 and 7 months. They'll grant you the regular credit card, which is the tier 2, the tier 1. They grant you the regular credit card with at least a credit limit of $2,000. And then they deposit the money that you deposit initially to secure that credit card into your account. A Discover, it's another one that is good. It's a good starter. So you start depositing the money. If you start responsibly using this, you can get all the points that we spoke about with these cards also as well. The only thing these cards don't do is that they don't give you any benefits. Like I pay everything with my credit cards because I get points. And with these points, I travel, I buy stuff, and it adds up. But these cards don't give you any benefit other than points on your credit score. Any other benefit is not there yet. But then you can go to the tier 2. First, you go from here, and then here, once your credit is a 650 and above, you can apply for any of this. This is for those with a few years of credit, like a year or 2 years of credit. Then you can apply for this. Do not apply for this with credit on the 650 because you're going to get denied. There are some benefits in this card, but not a lot. Like the Apple gives you 3%, or anything on Apple. I didn't put one here, which is the Amazon gives you 5% on any purchase on Amazon. These cards have benefits, and they don't have any yearly fee, like membership fee, and they're good. And if you're using them, always get accustomed to use their money for 30 days and then get all your coins and then pay them back. Do not purchase anything that you cannot pay by the end of the month, because that means you cannot afford it. That's the bottom line. Then after these credit cards and you apply for this, that you are getting here, you are getting most of the points. If you have 2 or 3 of this, you are getting most of the points. But remember, even when you get this, you do not close any of this. What I do to keep this going is that I keep a membership like Netflix, something that is between $7 and $10 a month, that I can keep them active. Because if you don't keep them active, those points are not going to be granted to you. Oh, my stuff moved here. So remember, the key thing here is that you want to get all the points. You don't want to leave any points on the table. You want to get those 550 points, and you got to use this wisely. In order to get the 165, you need to use this on a monthly basis. They have to be an in and out transaction. So much so that American Express automatically increases your limit if you have a certain amount of transactions per month. I pay everything. If I go and buy a sandwich, a Wawa, or anything, any other place, at the gas station, I pay anything with it, no matter how small and how big it is. Because all of a sudden you see them going up 10, 20,000, and they start increasing your credit. That credit is not there for you to go out on a shopping spree. It is there for you to use it wisely. And you get points and benefits. The big benefits are with this card. This is for people with established credit. You're in the 700s. Boom, these cards are key. They carry a membership. Some of them are like the American Express, about $600-700 a year. Some of them carry a yearly membership. However, the rewards are there. My United, you can, some of these you can go into any club if you travel, especially if you travel. These cards are great. So once you get to these cards, I use it in the same way. I use it and I get the benefits, but at the end of the month, it gets paid. I don't carry any balance higher than 3% to the next month. And remember, you only pay interest once that statement date comes. If it's the 27th of the month, any money that you leave to carry to the next month, you pay interest. Excuse me. However, anything that you have earned, any point, is yours. I keep transferring points and dollars and because I like those. I don't like points and credits. I like the dollars. So I keep transferring all the dollars every month. And it adds up on purchases that I do every month anyway. I go to a supermarket, I go to the gas station, I go to different places, expenses that I carry every month. So I might as well just make money while I'm doing it. But this is the last tier of cards. And of course, there's another tier that is by invitation only, but I didn't want to cover that in this webinar. So how do you stay out of the credit pit? Use credit responsibly. And what does that mean? It means that you don't ignore the creditors. You pay your bills on time. Why do you pay your bills on time? Because it is the number one factor in your credit report, 35%. And you're losing 192.5. That's a lot of points on your credit report. That can make the difference between you getting a 5% interest rate or a 20% interest rate. Well, that's almost usury, but a 15% interest rate on anything. That can make the difference. That can make the difference in your mortgage being $300 to $400 less every month. That can make the difference in you purchasing the car of your dream or the home of your dream. It can make a difference. Pull your credit quarterly. Look at it, see what's in there. 90% of the time, you're going to find something that is not in there. Because remember, these are all of these things are automated, and it's computers putting the information that someone else is sending it. It's going there. It's not a human being going in there checking one by one. That's not what's happening. And computers made me say, budget your spending. Never buy outside of your budget. Only buy what you can pay by the end of the month, by that statement day. That is important. I set all my credit cards in auto pay by the due date. And then by statement day, it's clear off. Never cross-sign for someone else's debt. This is a big one. Why? Because you're always going to have a family member, and I'm not saying to be rude. I learned the hard way. But what I do with people now, if they ask me to co-sign, no, let me teach you something. Do you have to have that car right now? Can you Uber, take public transportation for the next 2 months? Let me teach you how to do this. And then I'll teach you how to do it. And you are helping that person more than if you would just go ahead and sign and risk your own financial situation and financial stability for someone else. Maintain the utilization under 10%. That is key. Maintaining that 10%, it is best 1 to 3%. Remember that. But if you can just keep a couple of $100. So let's review and talk about how does credit work. Credit is a game. It is designed for you to put money in someone else's pocket. And if you look at it, you can use it to your advantage. Debt is not bad. It's good if you know how to use it responsibly. How do I repair my credit? Build the foundation. Remember, you start in one way. Pull out that credit report. Look at it. Do it quarterly. It is important because at one point or another, you will need credit. That's the bottom line. If you know you're going to build it, if you know you're going to need it, just build the foundation and make sure that you know what your next move will be before you need it. One of the mistakes I made was that I was always pretty good with my finances, and good with my credit. But there's a point in business, for those of us that have been in business a long time, understand that there's a point that sometimes things happen. And things happen in your life also as well, in your personal life, that affects everything else. So you need to have the foundation and always be prepared. The best advice that I can give to someone who is young in college and just starting is make sure you have a solid foundation when it comes to credit. Once you walk out of there, it doesn't matter how many student loans you have. Don't worry, you're still going to be paying for them for the next 80 years if you're lucky. But hopefully not. Hopefully most of us get forgiven of all these student loans that we've been carrying for years. So how do you deal with collections? Remember, we discussed a few steps. Collections have to be validated. You don't owe them money. You didn't do business with them. It's not unethical. You just didn't do business with them. You are going by what the law says that they have to provide to you. If they cannot provide you that, you cannot pay them money. Plain and simple. How do I keep a good credit score? How do I keep a good credit profile? Pull that credit quarterly. Use your credit cards because you have to use them. If you don't use them, if you just have them and leave them there, eventually the creditor is going to go ahead and take that from you or close the account. You don't need that. You can put a low membership, just keep them, keep using them so that you can go ahead and get those points. Keep your utilization to 1 to 3%. Now, I'm going to open it up for questions right now.